Good afternoon. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Sunday, July the 28th, 2024. I am changing the title of my weekend updates from the Eye of the Storm podcast to just an Elliott Wave weekly update. And I'm going to be reserving the Eye of the Storm podcast then for podcasts. My intent is to start inviting guests, and we're doing trading related podcasts that may include Elliott Wave, but will likely include many different topics that are affecting us as traders within these markets. So let me begin. I'm starting on the NASDAQ cash market, the NDX, and I'm going to go quickly out to my weekly chart so we can just quickly review where we are within this larger picture. So on the weekly basis, nothing really has changed in terms of where we stand. We continue to be within a primary fifth wave up. Now, just to review, what's inside that primary fifth wave are 5 waves of intermediate degree. Those are labeled in the yellow. And there's only 1 and 2 are complete. So we remain within the intermediate third wave. But what's inside an intermediate third wave are 5 waves of minor degree, of which we have minor 1, 2, and 3 now complete. So within this run of 5 waves of minor degree, we have a minor fourth wave to finish, and then a minor fifth wave up to put in the intermediate third wave. And then still yet to come would then be an intermediate fourth wave correction, followed by an intermediate fifth wave. So as I have been talking about it, when taking a look at the weekly chart, there remain 2 stronger waves up, one being a minor fifth wave, the second being an intermediate fifth wave, which will take the market to new all-time highs, not just once, but twice. Because minor wave 5 would, of course, be expected to top minor wave 3. And then when intermediate wave 3 is complete and we do an intermediate fourth wave, that intermediate fifth wave will be expected to go beyond the high of that intermediate third. So there's still plenty of time for rally, but at the moment, we remain within a minor fourth wave correction. Now I'm going to bring this down and put it on our daily chart so we can start to see what we're doing inside. So what's going to be inside this minor third wave? Well, we come down 1 degree, so it's going to be a minute degree A, B, C. Now, if you follow or if you studied Elliott, you realize that corrective waves can take any one of about 13 different variations. So, but right away, what I've always talked about, that what I'm looking for after a stronger or more major top, which is what we've just completed here in the NDX or in the NASDAQ. And in the cash market, that high was at 20,672. And that was done on July the 11th. So from there, I've been talking about that I'm looking for the development and the completion of 5 waves down. And my current count does suggest that that first 5 waves down on a minuet level have now been put in. And what that then completed, in my view, is the minute A wave. So what do we got left? A minute B wave and then a minute C wave. So what should we look for inside this minute B wave? We're looking for 3 waves, a 3-wave structure, an ABC, but it's going to be on minuet degree. So we're looking for minuet A, minuet B, minuet C. So let me bring this down again to our hourly chart so we can start to see what comes inside of all of this. So now we can see the breakdown more clearly. So here is the minor wave 3 top, and then we start down. Minuet 1, minuet 2, minuet 3, minuet 4, minuet 5, completing minute wave A. Now I know that I had left this questionable as to the possibility that we could have an additional leg down. And that actually remains in place. The market will let us know, and I believe the market's going to let us know pretty quickly next week, either Monday, Tuesday. We will be pretty much in alignment whether we are heading down. So in other words, if I just kind of had to put in an alternate account, even here in the cash market, I'd have to put that the 3 was down here and we're working through a 4 and still have a 5th wave to come. Or if I'm going to leave the 3 and the 4 here and I'm within this minute 5th wave, we still would have one more downside to go. And it could be stronger, but it needs to happen right away. So in other words, I wouldn't be pushing this out to Wednesday, Thursday, Friday, or even give it a whole nother week and allowing the market to just trade sideways to slightly higher. So to interpret it correctly, it would be 1, 2, and then we'd put the sub-minute 3rd wave down here, and this would have to be sub-minute wave 4. And then 1, 2, 1, 2, and then we just drop. That would be what the outlook would be if we still had downside to do. And where can we end up? Well, the first tag we have is right here, which is fib resistance for minor wave 4. Excuse me, fib support for minor wave 4. And that comes in at 18,568. But as we have looked at previously, that level would start to drop us inside or just above this particular start of the box that I'm looking for minor wave 4 to come in and bottom. And we'd always be looking for it to come in and bottom at the terminus of the 4th wave of 1 lesser degree. And that happens to be basis the cash at 16,974. So that's basis the cash market. Of course, it's going to be higher in the future because there's still premium in that future. Now, having said that, what are the possibilities that we do actually come down one more time and we break below the current low for this particular sequence at 18,721? Well, we'd have to count this as 1, 2, 3, 4, and we're going to drop down. So we can add a very quick, by the way, fib that is not actually super strong in terms of, you can see 2.618 is already like where it came down to. And that's on that basis. And that just wouldn't work because we'd be looking for it to take out that low. So the fibs and doing wave 1 to wave 5 really become a little bit sketchy. So we'd have to take all those out. And we're going to come right down to 3.618 and here. And let me put them in the proper perspective in terms of what count it would be. And now we see we're down here. So we get down and trust me, 3.618 and 4.236 are just additional fib levels as you're multiplying going in the direction, or as you're adding to the possibilities. Now, how they come into play is because wave 1 is not all that big as compared to this 5th wave. And in other words, it's like the 4th wave would have been much larger in comparison to wave 2. So it kind of throws it, skews it a little bit, but still the numbers can still work. And as you can see, 3.618 would definitely bring us below that low and becomes viable should the market just start to really come unglued now. So again, the count would be that this would be 3, this would be 4, 1, 2, 1, 2. What should happen? A stronger slide. Now, if it doesn't and we have a stronger rally, well, then this count is correct, being that would be a minuet wave 5 and minute wave A. But I'm leaving this open. There are many things happening in our world. There are many factors that can kind of twist and turn a particular emotion in the market. And again, not really knowing totally how all the traders came out of their expiration from Friday, which was not all that explosive, let's say. It was very kind of just mute and kind of stayed in a area, bounced back and forth without really doing anything seriously damaging to the upside or the downside within Friday's expiration. So it could be that we just resume our rally. And if that's the case, then this is going to be 5. That's going to be minute A, and this is A, B, and we're looking for the C wave to bring it up. Now, here are the fibs for that B wave. Now, most often the B wave should come between 0.382, 0.50, 0.50%. So 38% retracement, 50% retracement. And depending on the power behind it, we could have a 62% retracement. Now, what do we got coming up next week? We do have some earnings. The larger players, for example, Apple and I believe Amazon are on the same day. And let me just double check. Yes, Amazon's on August 1st. Apple is on August 1st. And those are all after the Fed meeting. So we're going to be looking for something. What could promote this market to just kind of start going up now? Well, first of all, they are now pricing in. Now, whether it's September or August, I don't know, because the Fed meeting is on the 31st. So the Fed meeting is going to be on the 31st of August, which of course is on Wednesday. So we could get just a rally in advance of that, a rally in advance of Apple and Amazon's earnings. We have AMD reports on the 30th. So AMD reports on Tuesday. That may or may not be a precursor, of course, to what NVIDIA may do or not do, or it could actually drive the market lower if they come in and disappoint. So that's kind of, this is what we're dealing with right now. This mixed emotions from earnings. You know, that they're coming out, they may beat the street or they beat estimates, and so, but they're not really blowing the doors off. And then they're not really being strong on their forward guidance for the next quarter. And so that kind of brings it where it's like we get a little bit of rally, then we have a stronger drop, etc. So we're not getting anywhere really until we hear from the bigger players. AMD is on that bigger side, but what it truly follows is NVIDIA. And NVIDIA hasn't even stated when they're going to report second quarter. So I'm looking for that to come out late August, maybe even September. So we're going to have to wait on that one. So again, we do have a couple of things next week that in advance of, we may start to see the market move higher. And the strength of it, I think, could just be following what we started with. Just kind of popping higher, and then of course they killed that one real quick. But then again, we're not getting, or we didn't get follow through to the downside of any magnitude on Friday, and so I left open on Friday that we could have come right back down and broken below this low, and then again below that low, which would have been more fitting for a fifth wave, and so then all this would be moved over. I'm leaving that open, and there's our markers for what possibly. So it's 18,667, and then right pretty much in the same level as that 0.236, which is 18,571. So I'm going to take those off for right now because my preferred count is that minute wave A is complete, and we're going to continue to rally up in a minute B wave. But as I just said, I am leaving open the potential. I'm not saying that's what's going to happen, so please don't misunderstand. I think it's better to be prepared for the potential if the market should decline over whatever comes out, whatever does present itself. It has the potential where it could drop down and finish minute wave A, just at a deeper point than where I have it marked. Doesn't mean that this count is wrong, just means that we have a little bit more to do. Otherwise, I really would be expecting the market to begin to move higher in anticipation of the Fed on Wednesday, in anticipation of AMD's earnings and others that may be coming out as well. So I think that we should start to find resistance. Again, I'm leaving this 0.236, even though it's already been penetrated once, but it didn't hold. That's at 19,186. And then we have the 50 at 19,345. That's the hourly 50. And then we have the 3A2 at 19,474, call it. And then the top side really kind of comes in, or should come in, 19,706. And then we have the 200 period moving average at 19,783 or 84. And then 0.618 at 19,938, 39, even maybe up to 40 if it wants to go a little bit above it. But I'm not looking for anything stronger than that on the basis that wave A is 5 waves, not 3. If wave A was an ABC, that would put us in a position where we could do a flat, and then we'd be looking for it to come all the way back to above 20,000. And right now I'm not looking for that because it's 5 waves down. Okay, so that would be here, and the moving averages are pretty much still in alignment for the market to decline. Now, but short term, you can see how the 13 and the 20 are kind of just going flat. So the 20 would start to present resistance, and that's coming in at 19,067. As long as it stays flat, it should meet a little bit of resistance there. Once it breaks through, then we're going to get that to turn higher, and this will kind of turn and go above it. That's the 13, go above it. And then the 50 will likely go flat, again, presenting itself to have resistance somewhere around 19,345. As we start to get into these fib resistance levels, we have to consider that the B wave that's actually in motion, there's two ways. We give an ABC-A, ABC-B, and then a 5-wave C, all being contained in a smaller area. If indeed we get stopped there or stop there, and this is going to be an ABC up, we come back down in a B wave, which would bring us back below, oh, excuse me, then we'd be looking for a C wave back up. And it likely then would be limited, because I wouldn't be looking for a stronger move. I'd be looking, I'm going to follow what the pattern is telling me. If I get an ABC up, that's 3 waves up for wave A, 3 waves down for wave B, and then we could be dealing with a flat. So we go up and we come back down towards this level, and then we go back up towards wherever it tops out. And then that's going to be the B wave. Now, it could be suggesting some future weakness in the market if we can't get some gusto, so to speak, within this B wave. Yet to be determined. But this is kind of what I start to look at, and helping to look to determine what is going to be coming next. So the B wave can be a little bit more complex, where we get a very nice clean ABC, or 5 for wave A of B. And if it's a 5, I'm again not looking for it to come up very high. But it does suggest that wave B will also be a zigzag. And that, quite frankly, I'm not really looking for. So, because this would be wave 1, wave 2, and be looking for a 3 wave to bring it up. But if it's A, B, and we're looking for the C wave, 1, 2, and we get a 3, then yes, we get 5 waves up. So those are, as it's being left with us over the weekend and starting on tomorrow for Monday, these are what I'd be looking for. Is this going to be A and that's B, and now we're in 1, 2, and then we get a 3, 4, and a 5, and we still end up in here? Yeah, that's very possible, completing the B wave. Or is it going to be ABC, A, of B, and then we get 3 waves down, B of B, and then we get the 5 waves, which does nothing more than extend it out. Extend it out while we wait for AMD's earnings, while we wait for the Fed decision on Wednesday. And then again, Thursday, we get Apple and Amazon. So it could be A up, B down through the Fed, and then Thursday we get Apple and Amazon, and it causes a spike. It maybe lasts, maybe it doesn't, and then we come back. So ultimately, I continue to look for a B wave, followed by another C wave, and then that is produced by the larger, and it should be a zigzag. And then that brings us down into the box. So there was a pretty strong A wave. Let me start by saying that. It was a very strong A wave. We get a B wave, which is fairly normal in power and in scope. Then that C wave is also going to be 5 waves. And it could be as strong, if not stronger, than the A wave. So the potential for it to come down into this lower level that I'm looking for, or between 236 and 382, yes, I think that still remains, and I think it's still strong. That this will be the area that we start to come into, and not necessarily at the upper levels. I think we definitely get down towards the lower level, and that 382 on the cash basis sits very cleanly at 17,255, 54.55 right in there. And then we still have that possibility of just punching through that and bottoming out towards the next level down. So then, of course, that would complete minor wave 4, and we'd be looking for another minor 5th wave up. So yet to be determined on what could possibly power that thing higher. But again, a lot of things going on. Let's take a look at the futures market and see how that is faring. Again, if I start back out on that weekly chart, still the same. Same as in the cash. We're still in that primary 5. We're still in the intermediate 3rd wave, and we just completed the minor 3rd, coming down in a minor 4, still have a minor 5th to do to complete the intermediate 3rd, then an intermediate 4th wave, followed by an intermediate 5th wave, also up to new all-time highs to complete the primary 5th wave. So again, they're going out now. Now we're likely towards the end of the year, maybe even to the beginning of 2025. Now, pulling it down, let's bring it down to the daily picture. Daily picture continues to show this is the most likely area that the market's going to come down to. And the future came very close. And that would have been on the 25th. So on last Thursday, we came pretty close to dipping into the beginning level. Did we actually come into? This was 18,883. And the top of the box is 18,000. Well, actually, take it back. We did start to cruise into the lower level, because this is 18,967, that high, back in March. So that was the start of the rectangles, the start of the box where we should find support for this 4. So the future did dip into the very top of it. And while that 18,815 still remains as fib support for minor wave 4, we were within 70 points of it. And that was on that big, huge down day that we had on Thursday. So it gives strength to the fact that we're on the right path, that likely completed wave A. We get a B wave here. The C wave will for sure come inside what we're looking for, raises the strength on the market, finishing it at that 382 level down to that low. So that low is 17,371 or 372. The 382 the 382 support is at 17,473, 474. So very close. But I think we could get at least one or the other, or even in between. Would I look for something stronger? It could happen, but then I got to go back out to my weekly to see, could it drop to 50%? It could. What it can't do, it can't break that. That's where minor wave 1 is, not minute. Minute wave 1, 2, 3, 4, 5 is complete. So it can't come down all the way there. So it definitely could come even further, but I'm not necessarily looking for it. That would be pretty big. If it got down even further to 16,000, that would be pretty big. A lot of things can drive it, so I can't say no to anything. And anybody who's followed me long enough, I do not ever say never. It'll never happen. They won't do that. As soon as you say that, the market's going to say, really? In any case, I'm going to bring this down. I'm going to bring it down to the hourly. Now we can see, let's take a look at the inside of all of this. And it does project like it's coming in pretty well in line with what our expectations would be. So let me just kind of go over that. So here we have the minor 3, and then we have minuet wave 1, minuet wave 2, and then we started to subdivide, and it really did a good job of subdividing. The 3 of 3 subdivided, and then we got the 4 and the 5, and then there is the minuet wave 3. The 4 still kind of went maybe to levels that I totally wouldn't be looking at, but it does count out, and it is not a 5-wave structure. As much as people want to think it is, it's not. There's the A, there's the B, and then we have, and that does look like a 3, but it does fit, and I'm leaving it as the 4th wave. Then we came down in an extended 5 waves on a sub-minuet level to put in minuet wave 5 and then the minute wave A. Now, I had left open here as well that we would drop again, but you can see we went higher rather than lower, but I am leaving open, and to present it in the futures market, it has a little bit stronger possibility that we are going to drop one more time, and that would push all 3 of these over. Right? So basically the 4 would kind of jump up to here, and this would be 1, 2, and we're going to come down fast. Now, that's going to be the clue. If we just start to meander, go back up, if we break above 19,300, then no, I would not suspect that we're going to come down. I'm going to suspect that we're going to go back up, and this stays in place, and this is 1, 2, 1, 2, or a bunch of 1, 2s, to be honest with you. So I would not be expecting the market to anything but just kind of start to launch higher. Once it gets above 19,379, 380, we're pretty much getting some confirmation that upside should be in play. So once we start breaking above here, and that could just be A, B, and now we are working the C wave, as the cash is kind of saying, and then we start to get ourselves up to 19,600, 19,700. And again, kind of looking for, not that this is a 4th wave and you're going to go to the 4th wave of 1 degree lower. No, but B waves can normally get 50 to 62%. And in the NASDAQ, that would not surprise me, which suggests then 19,933 to 20,181 or 180. Now, possibly, very strongly, it's not going to get much past 19,935, let's say. We do have some resistance here. Again, it tried to get above it, failed, dropped back down. So we have the hourly 50 moving average at 19,265, should provide some resistance. And a break through it just leaves it in the dust, and it's likely going to go flat and then provide support and start heading higher. if it moves up through it and stays above it, then I'm looking for it to build on it. Now, what happens if this is the 4 and we're still looking for being inside this 5th? It should be much stronger than what many may think, right? So, because this would, if that's the 4, this is 1 of 5, 2 of 5, and we're dropping, So we got to kind of come into play here to realize if this is still considering that this is all still the minuet 5th wave. Well, 1.618 has already been taken out. So and I'll show you that. 1.618 has already been taken out, and we're just going to go like that and say, okay, and see how much higher that is. In fact, it came down and found support right at it within this upward move, which is why I've taken it off, because it's not valid. But the next resistance point, 2.618, which is what Fibonacci, that's the sequence, calls for. If we're going to go back down, that's where that support would come in, 18,386 futures basis. So we have that fib support for the minor fourth wave, that comes in at 18,815. Then now we're dipping into the box. That is absolutely 100% expected on my part. So I'm just saying we could find some support here. And actually, if it stopped, it fits. Now, it's going to leave a very weird pattern if it stopped and rallies off of that. And it could be, here's A, B, C, B, and it comes in a flat, which again, all of that, just the way the pattern is and the way how the market's traded, it's either going to come down and break it or it's going to continue to go up and break the high, that high, go above 19,400. That, I think, is the stronger clue as to what directions do we have. So yes, we still have the potential where they could just pull the plug and they just go, nope, we don't like it, and they drop. And that's our support level down here. And I could, yeah, it really wouldn't be fitting because I'd have to put the 4 there, and then we'd be looking at, I could add one more layer of possibility. I'm not saying anything that this is what the market is going to do, okay? We're just looking at what possibilities does it have. Let me just do myself a favor, come down to the 15-minute so I can get this done. So I'm going to go from here because it could be also pretty strong. And that's saying that this is the 4. So what are we looking at? 1.618. If the 4 is here, we're coming down, is 18,740. Then we have the 2.618 for the minuet wave 5 at 18,386, and 2.618 for the subminute wave 5. If it's not here and we got to move it over, then that comes in at 18,339. So we still line up pretty cleanly for another stronger drop, should that be what the market's intent is. Now that, not that it was totally strong, because we had our downs and we had a stronger rally and another rejection. So it's really up in the air. I just want to say it's really up in the air. It's not consistent. Now, on a longer term basis, yes. I think what the market has done thus far is really laying the groundwork that we should come in. I got to go up one more. I'll go back to 4 hour. That we should go up in a B wave, put that high in the B wave, come back down and end up deeper into this. That's what my takeaway on all of this is. My expectations are we may put in this rally, but it will stop. It's a B wave, and it usually will stop. And that C wave that would pick up afterwards will likely be as strong or stronger than this A wave that we've just been through. So that's how I'm going to leave this for right now. We'll be looking to see what happens tomorrow morning. Next week, I guess I just said, we have AMD and some other stocks. We have to go through our list to what is going to be coming in. And then we have the Fed meeting on Wednesday. In terms of what else we might have economic wise, we will have consumer confidence. Monday, there's nothing. Consumer confidence on Tuesday, July the 30th, and also with job openings. So we're back to looking at the jobs market. That's what we get next week. And so Wednesday, along with the Fed, we have ADP employment. We have the Chicago Business Barometer, pending home sales, and FOMC on 2 p.m. Eastern on Wednesday. On Thursday, we have initial jobless claims, U.S. productivity, the S&P U.S. manufacturing PMI, ISM manufacturing. So again, a lot could be going on. So, you know, as well as if the Fed says, no, we're going to hold off, we're not going to do anything until much later, or the September, October meeting, well, you know, what's that going to do to the market? So we get a lot of structural things that could just really kind of come in and kibosh a rally. But in the meantime, I would like to see it go up and finish that B wave and then have something come out. So maybe we can finish this B wave on Monday and Tuesday, or even on Wednesday, and then the Fed comes out and puts the old kibosh on it, and then we start the C wave down, ABC, minor wave 4. All right, I'm going to finish it up right there, get this all posted. And the next Elliott Wave daily update will be on Monday, July the 29th.